What's up, you guys? It's Matt here. So in this video, I wanted to go over credit scores, everything about a credit score that you need to know, all of the basics. And if you wanted to know any basics of credit scores, hopefully this is the video that you really wanted to watch. I believe it is, but you be the judge of that. Make sure you watch till the end, and then you can actually judge. So go ahead and, watch the video. But before I get into it, make sure you hit the like button. Also hit the subscribe button for more videos just like this one. And remember that I'm doing a giveaway, which I'll get into at the end. So make sure you stick around till then. So credit scores. Anytime someone thinks of a credit score, they're always thinking, I need a certain score in order to get this loan, in order to get this credit card, in order to, get something that requires borrowing money, which is true. It's definitely true. But a lot of people don't know what they need to do. So you say that you need this credit score, but you don't know how to get this credit score. So I'm hoping that I can help you out in understanding everything that goes on behind the scenes of, credit scores and, just maybe a little bit of definitions and, explaining what things mean if you don't understand it. So let's actually take some time and just jump right into it. I'm not going to sit here and waste a bunch of your time, because I know your time is valuable. If I think my time is valuable, I know your time is valuable. And hopefully I'm teaching you something in this short period of time that we are, together. So yeah, let's jump into it. So VantageScore was developed by the three major credit bureaus, Equifax, Experian, and TransUnion. If they sound familiar, then this is the reason why. VantageScore was made to compete with FICO. That was pretty much it. Obviously to compete with FICO. So FICO scores range from 300 to 850. Obviously, when you see your score, you're going to see that you're within this range. If you're not within this range, something's wrong. If you don't have a score, then it's probably because you don't have any credit history, which really makes sense. The higher the score, the better in this case. If you have a high score, then it's good. Obviously, you want to get to like 850. That's what everybody wants to get to. They want to get to a perfect score, but who needs a perfect score? Realistically, you need to get to 750, and then, you can stay there and still get the best interest rates. So, they only go to a point. It's not like they're going to start giving you free stuff. They're not going to give you a car because you have an 850 credit score. It's not like you want a prize. It doesn't make sense. So you didn't want a prize. Just, try and get the best credit score you can get. But if you can't get to an 850, you physically don't have to get to an 850. Don't kill yourself to get there. So yeah, that's me. I usually hover around 750 up to 820 or so. If I can get up to that point. A lot of times my age of credit is the problem. But that's because I do a lot of credit card churning. So that's besides the point. So for both VantageScore and FICO score, the data used in collecting the credit scores comes from the bureaus. And the most important factor is on-time payments. And I'm pretty sure you believe that. On-time payments is very important. And this is why I always tell people that when you start, if you have no credit and you really want to start, you need to start with secured credit cards and start with, not only one, but I would go with 2 or 3. The only reason is because you have 3 on-time payments that you're making every single month, and you're going to be able to up the amount of payments you're putting forth and the amount of credit that you have out there. So your age of credit will be good. The number of accounts will be good. Hopefully your credit utilization will be good, but we can get into all of that stuff in a little bit. But you want to make sure that your on-time payments are, on time. Make sure all of your payments are on time. Don't ever let it go over. There are times to where they report late. So if you miss a payment, don't really have a fit, because they might not even report that right away. Most likely they won't report it. They're going to wait a good month. I know from experience because I've missed one payment before, and I kind of started to panic a little bit because I didn't want my score to go down. But that was a while back, and I know that I waited a month because I didn't know about the payment until I physically I went into my email and found an old email, and I'm getting into all this stuff. So it took a month for me to make the payment, and they still didn't report it. So that was definitely a good thing, and I learned something there. So I wouldn't say go ahead and do that because you never know what the company will do. So just make your payments on time. So now what we're going to do is we're going to go into what is considered a bad credit score to what is considered an excellent credit score. So we're going to break down the numbers of what they have and what I feel like should be in that range. So let's jump into it. So the bad credit score, they have listed as a range of 300 all the way up to 629. My range, my physical range, because I'm getting this from, I believe, NerdWallet, my range would be around 300 to just under 600. So if you're under 600, then that would be my range of being bad. And that's just me. And that's how I see it. Obviously, I see people that get denied for certain cards. Now, this is where you would basically get denied for everything, and you would get the highest interest rates possible if you do take out a loan for a car, not through a bank, just through the dealership, whatever dealership you go to. You're going to get a huge interest rate, 20, 30%, which is going to be ridiculous. So yeah, don't do that. If you have bad credit, look at the interest rate, especially if it's on like a car or something you're actually going to pay interest on. A credit card, you shouldn't have to pay interest on, but a car you will. So this is going to be tough because you're going to be denied for everything and you have no options, literally no options. And if you do, high interest rate. The next one is fair credit, which they have listed at 630 to 689. I mean, I guess that's fair, but I would start at 600 and then bring it up to maybe 650, maybe 660. Let's go with that. So 669. Let's go with that. So yeah, fair credit is where you would get denied for most, but you would get approved for some. So like student credit cards, lower tier credit cards, high interest credit cards, all types of things like that. It's not a place where you want to be. You really want to be in the next two sections. The next will be good credit, which they have listed at 690 to 719. I would bring that to about 670 up to about where they are, maybe 720 to 730. That's where I would bring the top tier at, or I guess not top tier, but the highest score in this good credit range. It would be 720 or 730. That would be my high. But this is where you would get approved for most, but you would get denied for some. So you wouldn't get the best interest rate possible, especially on like a car loan or mortgage or all of these other different types of things. You wouldn't get the best interest rate, but you would get a decent one, a livable one, a manageable one, which some of these other ones wouldn't be manageable at all for like the bad credit and fair credit. Next, you have the excellent credit, which they have listed at 720 and up. I would think excellent credit would be a little higher than that, not at 720, because this is basically saying that you will get approved for all, or if not like 99%. I feel like this has to be at like 740, 730, a little higher than that, 740 to 850. That would be considered excellent credit. And if you're at 750, that's where I plan to be for the rest of my life, is 750, between 750 and 800. If you're at 750 to 800 or 750 to 850, then you're going to get approved for all. Basically, you can get any card you want, and you call the shots. Besides the interest rate, they have their lower tiers of interest rate that they will give you for you being at 750, which will be like 10% on a credit card. And then the bad credit score will get 20, 25%, something like that. So yeah, I mean, I think this is definitely doable. Most of my ranges are pretty much within like 10 points or sometimes 20 points, something like that. But it's not really too far off. That makes sense. Where they are coming from definitely makes sense. But they're being really conservative by saying this stuff. Now, next thing that I wanted to look at was pieces of credit, your pieces of your credit score that will affect your credit score and how you can change things. So there are 6 pieces that you need to worry about. Some have high impact, some have low impact, and we're going to get into all of those. So the first one that I wanted to talk about is one that I talked about before, payment history. You want to make sure all of your on-time payments, all of your payments are on time. If you don't have all your payments on time, if that reaches to 99%, you can drop significantly. I mean, that's one break is from 100 to 99, and then it starts to go down. So just make sure your payments are on time. And I try and have as many payments as possible, not obviously as possible, but I try and have a lot of payments, just so that the number of payments that I have, all of my payment histories, I have 600, 700, 1,000 payments in my lifetime, something like that. But this is a high impact, so you want to make sure this is at 100%. Make sure you satisfy this. Anything that is at a high impact, you want to make sure that you're at the best place possible in that category. The next place that you want to look is the credit utilization. So credit card use, that's a high impact as well. You want to make sure that's below 30%. If you have $1,000 credit limit or credit line, then you only want to use $300 at most, and make sure it's a constant 30% or less than 30%. Basically, you can use $200, you can use $100. I'm not saying that you have to use $300, but make sure it's below the 300 mark. Don't use above 30%, because then you'll start to go down. Your credit score will start to decrease. The next piece is also another high impact, which is derogatory marks. If you have even one derogatory mark, your credit score will drop significantly. And you don't want to have this. So if you have anything in your name and you feel like you haven't paid it, it's going to go to collections. Don't let it go to collections, because then you're going to have an issue. Just don't get any derogatory marks. Just pay everything just like you normally do, and go from there. But don't let anything go to collections. Next, you want to look at age of credit. This is one of my worst categories because I do credit card churning. So literally, if you have a 10-year-old credit card, and you just opened a credit card, they're going to take the average of those two. So you're going to be at like 5 years. So as you keep opening credit cards, your average is going to drop. And I mean, that's where I sit. I know my average is around like 2 or 3 years or something. And it should be a lot higher than that if I wasn't churning. But this is medium impact. It's not anything that's like huge. Not as big as a payment history. And I know that my payment history makes up for a lot of space. But I know if my age of credit was good, I would be in the 800s consistently. I'll tell you that. But I really don't want to be. I'm happy with being at 750 or closer to 800. Next, you have total accounts. I know this is a place to where I'm in the green. When it comes to total accounts, I have a ton of accounts, and it's not just credit cards. It's also loans, student loans, anything that involves you borrowing money. And that's definitely a benefit. If you're a college student and you basically are saying, hey, I don't have a number of accounts, you probably do, because you have all of these loans that are going to be active after you leave. So if you have loans, if you get financial aid, then good for you. If you get grants, then good for you. But if you have all of these loans, then you're going to be able to have these, accounts that are open. Which is a good thing. But this is a low impact, so it's not something that you have to really worry about. Just like the next thing, it's a low impact, which is hard inquiries. Anybody that pulls your credit score, basically saying, hey, I want to make sure that, this person is reliable, they're making on-time payments, they're pulling your credit history, your information, then that's going to be a hard inquiry. And you really don't want a ton of those, but it really doesn't matter because they're low impact. Anything that's a low impact, you can do a lot of and be in the red and still have a really good score. So yeah, that's pretty much that. One thing that I do want to leave you with is just because you have a good score does not mean that you're going to be approved for every card. So don't take that from me saying that you'll get approved at being at a 750 to 850, because there are things that go into that. And you're probably thinking to yourself, I don't know why you're going back on your word saying that, I'll be approved for every single card? Well, there are a lot of factors. One big factor actually that you need to look out for, as well as all of these different categories, you need to look out for debt to income ratio. If your debt to income ratio is horrible, then you're not going to get approved for a card. The credit card company has to get something out of it, and they feel like if you have a bunch of debt somehow, some way, and you don't make enough money, or if you have you don't make enough money but you have a great credit score, then you're still going to get denied. You have to look at this information and say, hey, does it make sense if I put my income here and basically say, I'm making this much, but I want this card, which is a, top tier card for travelers. Does it make sense that I'm getting this card? Probably not. If you make $1,000 a month and you want the Amex Platinum card, I would imagine you're going to get denied because you only make $1,000 a month. Now, granted, you probably don't make $1,000 a month. You probably make more than that, but I'm just saying, this is just an example. So don't get bent out of shape. But yeah, that's pretty much it. I wanted to look at everything for a credit score, give you a credit score 101 so you see all of the different information behind the scenes. And if you really manage all of this stuff well, you can do it with Credit Karma. That's what I did it with before. And I still do it now. Sometimes I look at it, but that's not always the most up-to-date information. Then I have different scores in different areas, whether it's PSECU, all of my credit scores, all of my credit cards have different credit scores for some reason. So I know that I'm managing my credit well, and I make sure that I'm always in a good place. If I'm ever in a bad place, I find a way to fix it. And this is the way you find a way to fix it. Most of the time it's easy to where it's credit utilization. But it could be something more than that. So hopefully you do like this video. I wanted to make it really simple, nothing too complex, nothing digging into the nitty-gritty detail. So hopefully you do like it. If you do, make sure you hit the like button. That helps me out a lot. Also hit the subscribe button for more videos just like this one. And remember that I'm doing a giveaway, which is 2 Amazon gift cards when I hit my 2,000 subscriber mark. So make sure you hit the subscribe button to be entered in that giveaway. But I'm going to have to get out of here. And until next time, I'll see you guys later.